Hey guys, welcome back to my channel where I share with you our debt-free journey, and I also educate and motivate you to get out of debt as fast as possible. If you are new to my channel, welcome. Don't forget to click that subscribe button down below and that little bell notification button so you don't miss anything. But if you are new, I'm Brianna, and my husband and I started our debt-free journey in May of 2019, which was not that long ago. Since then, we have paid off around $20,000 worth of debt following Dave Ramsey's baby steps. I read Dave Ramsey's book, The Total Money Makeover, and it really has helped us change our lives. In today's video, I'm going to talk about how and why we refinanced our home. Now, I want to preface this video by saying I am not an expert on this subject. I'm just simply sharing with you what we did and how it actually helped us pay off one of our debts, which was sort of unexpected. So if you are thinking of refinancing your home, I'm going to link some helpful videos down below so you can make a better decision around that. But in the meantime, I'm going to share with you how we really use refinancing our home to our advantage. So if you're looking forward to this video, go ahead and give it a thumbs up and we're going to get right into it. So we refinanced our home. And because we did that, it actually helped us pay off our credit card somewhere around 10 months early. So at the end of this video, I'm going to explain exactly how that happened. So be sure to stay until the very end of this video so you can learn how refinancing your home might help you pay off some of your debt faster. Okay, so why did we choose to refinance? Well, first of all, we did a lot of research and we talked to a lot of different people, a lot of experts on this subject before we went and made a decision. This was not something that we just woke up one day and decided to do. We wanted to make sure that this decision was the best decision for us due to our own situation and that we knew exactly what we were getting ourselves into. So we decided to refinance because the loan that we took out on this house a year ago when we bought it had a really high interest rate. And then on top of that, our mortgage went up because of property taxes over the last couple of months. So our mortgage payment for the month went up. And we kind of looked at each other and we were like, that sucks, because in our opinion, our mortgage was already kind of high. So we said, okay, well, what could we do to possibly lower our mortgage payment? And that's when refinancing came up. And then we realized that mortgage rates have come down since last year. So we said, why don't we just look into this and see what could happen? And now I'm someone, when I'm trying to make a big decision such as this, I need to weigh the pros and cons. I need to say, well, what's good and what's bad about this decision? Because there are always pros and cons. So I looked at the basic pros. I said to my husband, if we do this, what are some very basic pros? So one of the basic pros was the fact that we have a lower interest rate now. So over the course of time, we are going to be paying a lot less in interest. The biggest pro to us was the fact that our mortgage payment dropped around $250 a month, which was exactly what we were looking for. We were actually pretty surprised when we figured out that our mortgage payment was going to be a lot less than what we were paying. So because of this drop, because of this $250 less that we'll be paying each month, we are going to be saving around $3,000 a year. So if you look at over the next 10 years, say, we will save around $30,000. So when we looked at those pros, we were kind of like, well, this seems like a no-brainer. But I did want to look at the cons because I did want to fully understand why someone wouldn't refinance. But even when we looked at the cons, it still seemed to make sense for us. So here are some of the cons. So con number one, when you decide to refinance your house, sometimes you will have to end up paying closing costs. And a lot of the time, these are sunk costs, so it's money that you can't recoup. And for us, we did have to pay closing costs. That was around $2,800. But because we are saving more money because our monthly payment went down by $250 a month, we are going to make that money back in just a little over 1 year. So another con is the fact that we added another year onto our loan after we refinanced. And that, to me, I was like, oh God, I don't know if I want to do that. But this is where the cons did still seem to make sense for us, because remember, every 10 years, we are going to be saving around $30,000. So it all still sort of seemed to make sense to us. And now again, I'm not a mortgage expert, I am not a refinancing expert, and I'm sure some people might listen to this video and say that's a dumb idea, I disagree with you, and that's totally fine. In fact, I'd be happy to hear your thoughts and opinions on this subject. But again, we did as much research as we could, we made the best decision that we could at this time, and we are benefiting from this. And in fact, as I mentioned at the beginning of this video, refinancing helped us pay off our credit card around 10 months early, and I'm gonna explain to you exactly how we did that. Oh, and just real quick, because we are following Dave Ramsey's baby steps, we essentially will have our mortgage paid off a lot faster than the average person, because the steps that we are going to take through Dave Ramsey's program and through Dave Ramsey's baby steps is making extra mortgage payments whenever we can and applying that money directly to the principal in certain situations whenever we have the opportunity to do that. So that is our goal. As we get closer to tackling our mortgage, we are going to make as many extra payments as we can. But I'm going to get into the whole credit card thing, so here we go. Okay, so due to the logistics of refinancing, we did not have to pay our mortgage for 1 month. So it was kind of like we got to skip a mortgage payment for a month due to certain decisions that we made around the logistics around closing. So we chose to roll the prepaid closing costs into the new loan, and instead we took the money that we would have used for that and we decided to pay off a very high interest credit card. Now, I'm not going to get into all the details around this because one, I think it's boring, and two, I'm, again, not an expert on this, so I'm going to link some videos down below, again, so you guys can figure out if this decision is the best decision for you or not. So there we were with some extra money because we didn't have to pay our mortgage for 1 month. So we took that money and I called the credit card company yesterday and I paid off our credit card. And I'm actually going to be posting that video next week, so go ahead, don't forget to subscribe to my channel. I pay off our credit card in that video. So if anyone's interested in seeing that, that's gonna be next week's video. But this credit card, we were like, we have to get rid of this now because the interest rate was so high. We had that credit card for around 5 years. And over time, that credit card saw probably a couple $100,000. At one time, we had around 20 grand on that card. And we are not people who go out and buy all these extravagant things. We hardly even went on any vacations over the past few years. It was simply just small purchase after small purchase. At first, we were spending it at restaurants and then on furniture for our new house. But then it became our credit card for home improvement. So everything we did on this house, whether it was inside or outside, we were just using that credit card. Then I read Dave Ramsey's book. This was back in May, but when we started our Total Money Makeover, and that's when I kind of looked at my husband and I was like, yo, like we are done with that credit card. And he had, been saying that and thinking that for a long time, but he needed me to come around and finally see and understand everything that he had kind of already known this whole time. So we paid off that credit card. We will not be getting another credit card. We will not be using another credit card ever. That's the plan, like ever, ever, ever. We are done using credit cards. And that is another piece of advice that Dave Ramsey gives in his book, The Total Money Makeover, and any of his podcasts or any of his videos on YouTube. He just says, like, cut your credit card up, throw it in the trash. And I am a firm believer of that. I do not believe in credit cards. I do not believe in the points and all of that BS that the credit card company sells you. So I'm not going to get into a rant about credit cards, but now that our credit card is paid off, we only have 2 debts left. And that is my husband's truck and my student loan. So because we are debt snowballing, we are now just going to tackle those 2 loans head on until they're gone. So the next one is my husband's truck payment. So we are taking the money that we were putting toward our credit card every month, and we are adding that on top of my husband's truck payment. Back in the day, my husband's truck payment was in the 300s, I believe, and then we paid off my car. And then we took my monthly car payment and tacked it onto my husband's truck payment. So his truck payment went up really high, which was awesome. Now we're going to be taking the amount that we were paying towards the credit card to pay it off every month, and we're adding that on top of my husband's truck payment. So he's now going to be paying around $1,000 a month towards his truck, and it's gonna be paid off like way earlier than it would have been if he just stuck with the average monthly payment that he was paying when he first purchased the truck. So that's what debt snowballing is. When his truck is paid off in a few months, we're going to take that $1,000 a month and put that towards my student loan every month. So that's gonna be knocked down and paid off, I think, even like 1 to 2 years faster than it ever would have been paid off, which is friggin' wild. And it's why we do this. This is exactly why we do this process. This is why we're paying off our debts this way, because it's quick and it's satisfying and it's super empowering. But I'm not gonna bore you with all of that right now in this video, but I just wanted to tell you guys why refinancing helped us, why we decided to refinance, how we did it, and then how it helped us pay off that high interest rate credit card. So if you do follow Dave Ramsey, you can probably tell that we are still on baby step 2, which is paying off your debt. We will be done paying it off. We had a goal to pay everything off by August of this year. I'm not certain if we're gonna make it to August. We might be a little bit later than that, which is still totally fine. But yeah, we're on baby step 2. The next step after that is that we are then going to be taking some extra cash every month and putting it towards our emergency fund, which I explained in my last video, so I'll link that up here for anybody who wants to see that. But that's it for today's video. That is everything about why and how we refinanced and how we really used refinancing to our benefit. Again, I know some of you might disagree, some of you might say that was a stupid decision and whatever, but we made the best decision we could. We're happy with it at this time, and that's it. So again, guys, don't forget to click subscribe, click that little bell notification button so you don't miss anything. I upload videos every week, and don't forget to give this video a thumbs up if you liked it. If you'd like to see more, don't forget to follow me on social media like Facebook and Instagram. I'm gonna link those down below, and I will see you guys next week. Thanks for watching. Bye.